This conference will now be recorded.
I have already discussed on this P2P complete process cycle. So I'll not discuss anything again about this process cycle. I'll just quickly note it down so that we can write accounting entries of this P2P cycle. RFQ is request for quotation. Quotation, purchase order, GRN, transfer to inventory organization. Okay, and next pay. P2P is procure to pay. Okay, and what we have discussed about pay: PO, invoice, payment, and what next? Reconciliation. So this is what we have discussed in the last session on this P2P, right? And we have discussed more actually. We have discussed even matching controls, how we can decide invoice to be paid or not to pay. That is based on the matching control. But that is not required now because we are going to discuss. 1 second, guys. Sorry, friends. So what I was saying, so we have discussed matching, 3 different way of matching also as part of this P2P discussion, but that is not required now because we are focused discussion on accounting entries of this P2P process. So before I write accounting entries of this P2P process, I just want to introduce to one topic, that is money measurement. See, money measurement concept, it is a part of accounting concepts. Money measurement concept, what it says, the definition of money measurement concept is whenever we can measure a transaction process in money, for that you have to create a accounting entry in the books, or you have to process journal voucher or journal entry in the books, right? So that details will be shown in the financial reporting, right? See, why do we create process accounting entries when we do any transaction process? To show the financial to show that information on the financial report, right? So these all activities are done in the business, and these are the expenses, or these are revenue, or these are the amount, isn't it? So now money measurement concept says, if any transaction process that cannot measure in money, you don't require to write any accounting entry, or you don't require to post any accounting entry in the books. So now, as per that definition, requisition is just a document process, right? Requisition, it is just a document process. So what happens here, when any department in the business required some item, they just send that notice to the procurement team. How they send through requisition, right? So it's just a document process that do not require any accounting entry. And request for quotation, whatever quotation, when company want to request for quotation, definitely company is going to request from 2-3 different vendors, right? So those, whatever quotations are requested from different vendors, that need to be recorded in RFQ, right? Quotation, whatever quotation we are requesting from the vendor, that need to be recorded in RFQ. And quotation analysis It's nothing but when company receives multiple quotation, they have to pick the best one. That's why quotation analysis. So these two processes also do not require any accounting entry because this is just a document process. See here, see to say in simple, you can think in this way also. So is there anything coming in or going out? And if something is coming in and going out, is there any value for that transaction? I mean, is there any value for that process? If no, then you can just uh, avoid the accounting process or journal process for that particular transaction process, right? And then purchase order, create purchase order. So when we create purchase order, when business creates purchase order to get an item, here also accounting entry is not required because order is processed to send it to the vendor, and it is just a document, right? So here also no accounting entry is required because there is no value, there is no such value coming in the business or going out of the business, or there is no value that comes into this transaction process, right? See, even I order for $10,000. See, when I order, definitely I'll write how many units I'm ordering and each unit price and the cost of the purchase order. But this is not required to record in any books because this is just a document process. We are showing in document that this is my order and this is the agreement price and this is what the total price that I'm going to pay for this order delivery if order is received, right? GRN level, yes, we need to book an accounting entry here at GRN level. So what entry we book at GRN level? We book, I mean, as per Oracle, I'm going to discuss now. See, normally when if somebody is master of accounts, they might be see a different terminologies now because I'm going to pick accounts as per Oracle supplied account terminologies. Okay, I'm not going to use a common terms that what we have learned in the college days or some other softwares may have. So GRN, yes, we are receiving some goods, right? So here entry need to book. How do we book the entry? I mean, that has some value. So we are receiving something in the business and that has some value, and that you need to show in the books, right? So in books, receiving item debit, it is nothing but purchase debit. As per the book knowledge, I mean, as per the book subject, it is nothing but purchase debit. What is credit? Cash credit. Are you guys following me? Because I don't hear anything from your side.
Yes, sir. I'm listening.
Yes.
So cash, can I keep this cash as credit?
No.
Okay. So what need to be credit then, Shiva?
Inventory account.
Inventory
Inventory
account.
account.
So this is what the inventory account, right? Receiving item is your the items you have received. So if you book inventory account, then receiving
Inventory
item
account
debit,
account.
inventory credit.
Sir, I have a doubt here. Sir, issued material is debited, inventory is credited, I think.
No. See, receiving
Actually,
item
we
debit, see, you're showing inventory. You can't show inventory in credit. It has to be debit because that is an item coming into the business, right? How you can show in the credit? Because as per the golden rule, if you think debit what comes in, so if you put inventory in credit, then debit what comes in, credit what goes out. You're showing both. Like some item is
yes,
coming in, inventory is going out.
yes, sir. I know the rules. Personal, nominal, and real account.
Yeah.
What mean that about? Uh, we are receiving in goods in our organization.
Yeah.
Metal is debited, but stock in hand. How can you show that you are in stock in hand?
See, stock in hand is nothing but the items that you have received is in your hand, right?
You can
That's what the
write then
debit is.
inventory organization not transfer to inventory ledgers.
Yeah, but before transferring to inventory organization, we are following double entry system, right? So we can't book. We have to book credit also with this debit.
But
You
how
can't
can
see
you show the
any.
P&L account, sir? My question is P&L account. How can it reflected that there?
Which one you're talking about? P&L account.
Yeah,
That P&L account comes.
metal is debited.
Yeah, yeah. See, material. See, the item that you have received is also your P&L account because you show this as a purchase, right? The item received
Yeah,
you show as a purchase.
yeah.
That's what I said. This is nothing but purchase account. So when you debit purchase account, how can you keep material as credit?
That okay, fine. You can receive item debited, metal is debited, but oh, how can you write there cash is credited? It's
That is what
imagine.
I'm saying. If I write cash, is that correct or you want to say something? Uh, See, I wantedly write wrong so that
Yeah.
I just want to see you are active and listening or not. And if you want to add something, you can add here. That is why I said
Okay,
cash.
okay.
Right?
So that's why I'm
I asked
asking
you,
you.
cash
Can
is correct or wrong? Can I book cash
okay.
account in credit, right?
Yeah, that's why I'm thinking about there. I will write there something.
Yeah.
Okay, fine, sir. Thank
So what account we book here?
you. I think his inventory is credited.
Okay, so as per inventory need to be credited. That's what you said. So you are saying that items we have received. See now, let's say you are working in inventory warehouse. Okay, so you have received item that you debit and inventory you credit. Then the accounting impact is like inventory is going out, right? How can you credit
Yes.
that? Then your in the books inventory cannot be credit. When you do purchase account debit, in books inventory cannot be credit, right? So here, when we receive an item, we have to show accounts payable credit,
Yeah, right.
right? Because we have to
What
pay
do you
for
mean
what we
about
have received.
stock in hand?
Which one you are talking about? See,
Stock in hand, how
stock
can you
in
show it?
hand. See, stock in hand we show once we move to the inventory organization, right? So stock in
Yeah.
hand is nothing
Okay.
but here inventory material. You can say
I
if it
can
is
say
an
one
asset,
example,
then
but I have run there on DMart. I have one of the dealership. I received a stock. How can
Mhm.
I entry done there?
See when
I
you
received a
receive a
metal.
stock, when you receive a stock in warehouse, you will keep it as inventory item debit, accounts payable credit. Because I have
Payable is
received,
credit.
yeah.
Payable means
So
nothing but
that,
liability. Pay
yes,
to vendor.
yes. It's not pay to
Yeah.
vendor. I mean, we have to pay. So which vendor
Okay.
we are going to pay, that we will decide at the time of invoice process, right?
Yeah. Right.
So that is why we are booking as accounts payable.
But
Accounts payable
warehouse we
is
are received the
liability account.
goods.
Yeah.
How
So
to book the entry there? But
that's what, see,
they first
inventory,
warehouse meant
see, receiving item debit, that means I am showing in books that I have received some item. That item could be a
yes,
inventory material, it could be a asset item, or it could be a material, sorry, expense item, right? So that item
yes.
I'm showing as debit,
Okay,
and for that we have to pay. I am showing accounts payable as credit,
okay, fine. You can
right?
mention there a vendor name. I think nothing but there. Accounts
No,
payable nothing but is vendor.
how can you mention vendor name in accounts payable? See, now you are
But
receiving in
where
warehouse.
and where
I
from
tell
you
you one
received the
thing.
material? You can show which vendor you can. How can you identify there?
Wait, Narendra, listen to me also. Wait. See, now,
Uh,
let's say you're working in warehouse. I have ordered to, let's say I have ordered to, let's say Dabur, but that items are supplied by XYZ company. Okay,
okay.
XYZ company. So you can't show XYZ company here because the bill is going to come from Dabur, right?
Yes.
Then if you show, see, for you, you don't know Dabur is vendor or XYZ is vendor. You know that we have
It's
ordered
all on
something and then we have
accrual
received.
base. You can call it accrual base, I think.
Exactly. Accounts payable is nothing but accrual,
Okay,
right?
fine.
AP accrual
Yes.
we say, or you can say accounts payable. Accounts payable is nothing but accrual. When
Okay,
you
fine.
process invoice, you have to show the liability account, that actual liability account that says which vendor you are going to pay.
Yeah, yes, fine. Thank you. Understand.
Okay. Yes. So when you move to the inventory organization, then it will turn into inventory material, or it will go to asset clearing account. It will not book as asset account because asset account will book in asset module. That time this asset account will transfer to the asset module, and asset clearing account get knock off there. Okay. So better I'll not write here, that I'll show in the system directly. I don't want to make more confused writing all different accounts. So you can just take it as inventory material as debit. Okay. It could be any item. It can be asset, or it can be inventory, or it can be expense item. And for this, the receiving item need to be credit, because when you are showing stock in hand, like Narendra was saying, the moment you show stock in hand, your purchase account or your receiving item need to be knock off. Right. So now the entry remains here is inventory material debit, accounts payable credit. And now finance team receives an invoice, and
So
that
you
is why
should
we do
mention there
the,
CR.
come
Sorry
again.
for disturbing. Receiving item is credited. You can mention there CR.
Sorry.
Knockout entry.
Yeah.
Some people are not.
Yeah. Sorry. I copied, right. So that's why it came debit. It came as debit. Okay. So inventory material debit and receiving item credit. And when we receive, I mean, when invoice received in payables department or in finance department, they can't pay blindly, because it can bill anything, but the actual items that are received and in warehouse are different, right? So that is the reason we have some matching concept. Yesterday, what we have discussed. Let's say everything is validated, everything is fine, then we process invoice, and for that invoice, the accounting entry creates as what debit? Accounts payable debit. And supplier account is nothing but in Oracle we use common account for all suppliers, that is liability. Okay. So liability account need to be credit. Now after invoice is processed, this account is knocked off. So whatever we have to pay at invoice level, we have shown which vendor we are going to pay, right? So we have shown which vendor we are going to pay, liability credit, and accounts payable debit. Accounts payable got knocked off, and the entry remains here till this process is inventory material debit and the liability credit. And when the payment happens, or when payment is issued and processed in system, the entry, what entry we create here at this level?
Liability is debited.
Liability debit. And what need?
Cash accrual is credit.
Cash.
Accrual, I think cash. Uh,
It's not cash
what
accrual.
is what it called? I think that I don't.
See, you can see, normally I'll tell you, in the normal books what we have learned is bank account need to be credit, because see, nowadays it happens from bank only, right? No company pay directly cash, right? There is no cash payments and all. So bank account need to be credit. But we, in Oracle, we don't follow bank account. The account term we follow is cash clearing. See, sometimes vendor may say, I mean, vendor in the sense your client may say, we don't want to book cash clearing, because if we book cash clearing, we have to use cash management. Because in cash management only, see, if you, at payment time, if you are booking cash clearing, then that payment need to reconcile in cash management to knock off this cash clearing account and get the cash account. Okay, because reconciliation happened with bank statement in cash management module. sometimes client may not use, or the vendor, I mean the client, your client or your vendor may not use cash management module. So when they are not using cash management module, definitely they will ask you to directly, we want to create cash account at this level only. Yeah, that is possible. For that we have some setup. Okay, so we can do that setup. This requirement may come, or this can be an interview question also. If vendor asks, if you are, I mean, if we want to book a cash account at payment level, can we do that? Yes, that can be done only if cash management module is not using. If the cash management module is using in the project, then reconciliation happens there, and then cash account is going to process through reconciliation process. If cash management is not using, then at payment level we can book cash account. We have some setup for that, and that setup I can't explain you now, because that you need to see in the system what option we enable and how we do. Okay, you will see that in future. Now, as of now, I'll write it as cash clearing. And when reconciliation happens, that time the entry we book as cash clearing debit. And what is credit? Cash account credit. So we'll knock off this cash clearing. See, you guys, you all guys are aware of this knockoff, right? I'm just saying knockoff, but you all know Shiva, Ranjit, Garima, Narendra.
Yes, sir.
Yeah, yeah, yes, I have idea.
See, if you have debit and, see, I'll take simple example. In your bank account, if you have debit and credit both same amount, that is knocked off, right? Let's say I deposited 100 rupees and that is drawn immediately. So it's knock off. The balance will be zero, right? Same here also.
Yes,
You have a same balance in debit and credit with the same account. That shows in the final trial balance, that shows the amount is zero for that account. Okay. Yeah. So the final entry remains is inventory material debit and cash account credit. So this is what the process of P2P. Let's do O2C process. I'll quickly write O2C process here. Order entry, order booking, order reservation, pick and release, and then order ship. Here AR invoice or sales invoice, you can say, and receipt, remittance, reconciliation. Okay, here also you can think about money measurement. The concept says what it says, I have already explained, right? So order entry is just a document process, you can say, in system. I mean, in the system, or if you think about any technology, order entry is just a document process. That is not, I mean, that you can't measure in money, because there is no value coming in or going out. And order booking is also same. We are just booking an order. And order booking is also important, because if you cannot book the order, warehouse people cannot reserve the items. So after order is booked, see, now let's say I am sitting in office, I got an order, I enter that order, I book it. The moment I book, warehouse, that information goes to the warehouse system. Warehouse people, when they get notification that order is booked, then they will reserve the order with so and so customer name, right? And once order is reserved, what next? Yeah, once order is reserved, then pick and release. Someone have to pick and release. That warehouse people do pick and release. Yeah, in pick and release, see, when warehouse people or a person who is working in warehouse, when that person pick, the moment that person pick a warehouse, I mean, those items will become empty in the warehouse, right? Those items will become empty in the warehouse, right? So do we show, I mean, that will impact to the finance, or do we show that in the finance book, or we don't show? Yeah, do we book any accounting entry at this level? Okay, yes, we have to book an accounting entry at this level, because when item picks, warehouse become empty, right? So we have to show that in books. So and so items are gone from the warehouse, right? The entry is tag inventory debit. Tag inventory is nothing but the product. Okay, the product what we are selling, what company is selling, that product need to be debit. And what is credit? Inventory organization credit, but that tag inventory happens from the inventory organization, right? So inventory organization need to be credit. So whichever the inventory organization, let's say inventory organization is name is XYZ, so that XYZ inventory organization need to be credit, right? And once it is shipped to the customer, so we have to show that in the books, like it got shipped. Who will show that in the books? Warehouse people only, right? Because it's warehouse responsibility that they have to show in the books, we have delivered item to the customer, right? So once it's shipped, then the entry will be generated as cost of goods sold debit and the tag inventory credit, because whatever inventory is tagged, that is gone now. So why they are showing cost of goods sold? Because when item go out from the warehouse, the item value is different. When you generate an invoice, that item value will be different again, right? Let's say you're manufacturing pen, for example. Okay, you have manufactured pen and you kept in the warehouse, let's say. So when pen is manufactured, the pen cost is, let's say, 1 rupee for each pen to manufacture. So when you keep in warehouse, that cost will be 1 rupee only, right? Yes or no? Or it will change?
Yes, sir.
So cost of goods sold will show as 1 rupee pen is sold, right? But when you generate invoice and give it to the customer, do you charge only 1 rupee?
No, sir.
No, we have to charge more than that, right? So here at this level, there are many things includes like tax or maybe profits. I mean profits to the sold item, right? So that is why here we show revenue. Revenue need to be credit, and for that revenue, we have to receive an item. Revenue is nothing but sales. There is no difference between, see, cost of goods sold is not sell. Okay, it is an account that tells that these items are sold, but it's not revenue. The actual revenue is the revenue account that hit at AR level. right? Receivables time. So when you generate an invoice, so account receivables debit and the revenue account credit. Against the cell we have to receive, that's why we show AR. AR is an asset, so we show AR, and revenue is revenue account only. So we show revenue, it's nothing but cell account. And then at the time of receipt account debit, actually in Oracle we call it as confirmed receipt, because we have confirmed that we have received it. Confirmed receipt debit. And what is credit? We have received against this AR account. Yes or no?
Yes.
The AR account
sir.
need to be knock off. And at the time of remittance, see, remittance, yesterday I have already discussed, when directly payment comes to the bank, remittance account is not required. Then directly at reconciliation time, the entry generates as cash debit, confirmed receipt, credit. So confirmed receipt get knock off and the cash account remains. Okay. So if you have remittance, for any transaction, if you have remittance, then you will have confirmed remitted or confirmed remittance debit, and this receipt is knocked off because whatever received, that is gone to that is showing as remitted now. Right. And this confirmed receipt will be credit here. Again, this is also interview question, guys, because when you attend interview, and if they're asking any question from AR, you can expect this question, like remittance is required for all receipts that are created. You have to say no, we have option to skip remittance process, or you can say roll out remittance process when we are using when we are using electronic payment system. So in electronic payment system, how it happens, customer pay to the bank pass that information to the middleware server. I mean, our company will have some middleware server, so we'll ask bank to put that information in some server. From that server, our middleware pick the information. Every company will have middleware to transfer data from one server to another server, right? And from that middleware, information come to the Oracle interface table or Oracle table. In backend, we have interface tables, and from that interface table, the system runs some program and receipts will be generated in the Oracle UI, user interface. That's nothing but application. For that, remittance is not. But when we are receiving checks, DDs or cash, so that is coming in hand, right? So how system can pass the information? Cannot, right? For that, you process receipt, and that receipt you will remit in the bank account to show to the system that whatever received are in so and so bank account, right? And then finally, after reconciliation, cash account comes into this transaction process. Clear? So these are the accounting entries that comes in P2P and O2C cycle. And one thing I want to add here, if you want, I'll share this Excel also with you guys once the WhatsApp group is created for this batch, maybe in a day or two. And We will keep adding to this P2P and O2C cycle some more entries when we start doing the process in software. Okay, Oracle ERP. Why I am saying, because 99% in most of the interview you can expect this P2P and O2C process questions. Accounting entries also. They'll pick anything. See, they don't ask you the entire flow. Sometimes they ask you to explain entire flow. They give you situation, and from the situation you have to say, like suddenly they ask like what payment entry will be generated. So you have to say liability to cash clearing, right? Liability debit and cash clearing credit. So you have to remember all these accounting entries and the process also, so that if it is asked in interview, you can explain them clearly how the process works. Clear? So you have to study on this P2P and O2C, guys. Clear? Yeah. So next is we have to discuss organization structure. Along with organization structure only, chart of account discussion comes. So probably that I'll take tomorrow, because both topics take 1 hour. So both I'll finish in the next session tomorrow. Tomorrow we'll have 1 hour. From tomorrow only we'll have 1 hour session. I said 3 days, 4 classes will be 45 minutes, right? So from tomorrow only we'll keep 1 hour session, because from tomorrow most of the topics, whatever I pick, will take at least 1 hour. So tomorrow we will discuss 2 topics. One is organization structure. As part of organization structure only, we discuss chart of account. When I discuss about organization structure, there will be a chart of account topic. So we'll pick chart of account topic and we will discuss in detail about chart of account also. Clear? So any questions you guys have, you can ask me now. I'll give you 5 to 10 minutes time. In this P2P and O2C, we are done with P2P and O2C theory part. I will be working on this P2P and O2C cycle in practical in future. And as I said yesterday, we have other activities also involved in this P2P and O2C. That is, interest will be processed, discounts will be applied, and advance payments happens, and that need to be adjusted. And in AR, balance due invoices will be created. If customer is paying half amount, and for half amount customer is asking for a balance due invoice, then balance due invoice need to be generated. So all these other transactions will be I mean, I'll be showing you directly in the system, because that is one of the event of this process, right? So that is why I'll show you directly in the system, and that time only I'll explain you about the accounting entry of that process. That is one of the event, that is not a process. So this is actually the process what I've discussed. Yeah. And guys, one more thing, like when you are attending interview, you listen to my session again, right? So some terms that I have used, like you have to, I said event, right? So you have to use the same words to prove yourself as you have experienced. Okay, so events, data supply, this kind of terms you have to use when you attend interview. Okay, so if you're using very common words, I mean, they will not get impressed. If you're using very strong word that actually use in IT companies, they'll understand, okay, you have some experience and you can you have some experience, and they can release you offer letter. So when you're listening to my session, if you find any words that need to be written and you want to write the definition of it, you can do that. Okay, yeah. So any questions you have? Okay, so guys, I request all to get yourself registered for the course, because we are moving on to the classes, regular classes now. You have to get yourself registered for this course. So get it done as early as possible. Okay, yeah.
Sir, can you explain me little about the AR and AP? Little, like I want to brush up my memories about the AP and AR.
See, there are 5 modules, right? So GL module, you can take it as master, because without GL, no other modules can be operated. Other modules are subledger modules. GL is a ledger module. So GL is a master that supplies accounts data to the other module, and that gives reports to the financial reports to the, right? That's why it's a master. And accounts payable it is to process vendor transactions, where actually we process payments to the vendor. The main purpose of using accounts payable is to process payments to the vendor. Okay. And account receivable, we do other activities like vendor invoice process and payment process, but the purpose is making payments to the vendors. Because see, what business do 2 major activities. They buy whatever required in business, and they sell whatever product they are selling to the customers, right? So with buy and sell activity, they make their profits, right? So when they are buying, they have to pay for that. So where payment happens in payables, accounts payable.
Okay.
AP module. AR module is to show whatever is sold. Whatever item is sold, for that company receives, right? Company receives money for that, customer pay for that. So that, to show that information we use, or to process that information, we use AR module. AR module we use to process customer transactions. Okay. What kind of transactions? Customer payment transactions, when customer pays, right? Yeah. And asset module we use in finance to process fixed assets. Okay, all fixed assets will be processed in asset module, and all asset transactions will be doing in asset module, like showing monthly depreciation or quarterly depreciation, whatever. And apart from that, any asset company stopped using, retiring asset, revaluing asset value, there are many more activities we do in asset module. And cash management module, it is to maintain bank information and transferring balance from one bank to another bank. Okay, it is all about managing money, managing the cash.
And the remittance part is like when we do the cash something, na, it's not related to the bank, I think.
Remittance is, you're showing in AR module that whatever received, that is remitted in so and so bank account. You're showing in that AR. See, when you receive check, you create receipt, right?
Yes.
And that receipt can go to any bank account.
Okay.
Right? So that bank account you will show at the time of remittance.
Okay, so when we skip the remittance part that you said,
remittance part we skip. Remittance part we skip when customer directly paying to the bank, online transfer.
Okay.
So you are not depositing, right? So it is directly coming to the bank, and bank will supply the data to the middleware server, and from there data comes to the Oracle through some process. There will be data transfer process.
Okay, fine, sir. Thank you. Sir, one more thing I want to ask you. Do we get the PPTs of this theory part from your side or not?
See, we'll be sharing one Oracle provided document. From that document only you can study, but it may not be as clear as I am explaining you, because they have more theory in the materials what Oracle provided. You may not find that, because see, what I am explaining, it is my knowledge, my experience, and my knowledge, right?
Yeah.
So what Oracle is provided, that may have see, the process will be same, but you may see more theory, and reading that you may get bored. So
that's what I'm asking. Sorry to interrupt you. That's what I'm asking from your part only. That the way you are explaining the things. Do you have any PPTs for this thing? Or?
From the day we started providing recorded videos, we are not preparing any PPTs and all, because we are giving directly recorded videos, and from that you can note it down, and you can watch n number of time. You can download and you can keep it in your drive.
Yeah, sir. Thank you.
You're welcome.
GL nothing but is ledger balance showing, I think.
GL is ledger. That's what I'm saying. It's a master. So
Yeah, showing is
it
ledger
supplies,
balance.
yeah, it supplies data to finance data, I mean accounts data to the other module like APAR. Again, it comes from APNAR. Once it is accounted, it will come to GL only, and then it will show us the financial. That will show in the financial report.
Based on GL, you prepare the financial report, I think.
Yeah, based on that's what I'm saying, right? GL is a master. Master in the sense that gives everything financial information.
Okay, fine. Thank you.
You're welcome. So, any more questions from others? Shiva, Ranjit. Okay, you're clear. That's great. So now I'm going to call off this session for today, and we'll meet again tomorrow at same time. Good night, friends. Bye.
Okay, bye. Good night. Thank you.
Bye, good night.